Hello, this is Bibby here from stockmarketnewschannel.com. It's the 30th of January 2013. Can you believe it? 1 month of the new year has passed already. I'm dubbing this year the year of abundance, as my cycle formation point to this being an exceptional year for making profits from the stock market, provided you know where to look, when to invest, and on times and occasions when to disinvest. So we're going to start today with our weekly global roundup, and for those of you who listened to me before, this is a diverse spread of investments covering energy, metals and various world markets and currencies to give you a bigger picture of what's happening across the globe. And today we're starting with the chart on energy, and we can see the energy index is breaking through this resistance level. If this angle were to continue, and this angle has been in formation for quite some period here, we're breaking out to the upside. So that's telling us that demand for energy is increasing, which is normally an indicator of growth. Next we come on to the more familiar Dow Jones Industrials 30 index, and you can see last year we put a support level where my arrow is, and this support level was broken out of in April of last year. It was a false breakout. We broke down again. There was another false breakout, and then this time we've broken out and we've gone to new highs. So the markets are currently in uptrends, including the Dow Jones. The Nasdaq is approaching new highs. That's under a little bit of duress because Apple, the stock that we gave a buy recommendation on way back in March of 2009, which I'll show you now, has given a sell at 655. I'll just show you the analysis. So the stop loss was broken here, where that circle is, and we've been on a downtrend ever since. Now, some leading financial institutions around the world, when we were nearing this 500 mark and even 500 mark here and 550 around here, said this stock is fallen too much, it's a buy signal. But I said no, this is in a bear territory. It could be basing out because we were seeing support around 500, but now that's been broken and we're around 458. So the downtrend is still intact and it's not a place to be. That currently is also having a negative effect on the Nasdaq because it's quite a heavy weighting in the Nasdaq. Now let's look at the dollar. There's been a lot of talk about dollar and dollar strength. I can't see it. Yes, dollar versus yen is strong, but that's more a case of the yen being weak. What we've got at the moment is we've got support angle coming from this circle all the way up to here. So on the US dollar index, 79 would be the support level, and we're gradually converging. So that circle there is 80. So it's almost, if we're going to get a breakout of 79 to 80 or 79 to 81, that will show us the new direction of the dollar. Now, what is interesting here is the way the European markets are performing, because that's where most of the trouble is supposedly in the economy and the debt structuring. But these are some of the most powerful markets, because stock markets, as you will read in my upcoming book of how to really trade the stock market, do not work as most people perceive they work. So we've had a breakout. This is the top in September. We had a decline. We had a breakout in December, and now we're firmly into this uptrend. And again, you see me drawing these lines on this chart, and if you subscribe to howtotradethestockmarket.com, I'll fully explain what these lines mean. But you can see here from November, this ETF, Exchange Traded Fund for Spain, was trading around $27, and now it's over $32. That's up 20% since November, which is not too bad. This is Germany, and there's more analysis on here. We had a similar correction here to November, and then the uptrend started, and we're reaching new highs after we broke out of 24. Now on the world index level of gold, we've been in this decline. But this is quite interesting, and I'm going to show you some analysis I would apply here. So first of all, we've got a downtrend, and let's put some angles on to see what that is, and that's here. But I think we're nearing a support level. So although people are a bit bearish on gold at the moment, and this would represent gold shares, 1650 is support on the downside, and a break above 1700 would be very positive on the upside. So all you have to do here is wait for the breakout, don't take any action. It's definitely not in an uptrend at the moment, but it's down to support levels, and because we broke out of this resistance level way back in August, we broke out, tested it, and then pulled away, we've come back to support. So sometimes this is a bit like a shape like a pendant, and if you get a breakout above this level, it will be quite bullish for gold. Now this is the world index, stock market index, and as you can see here, we've broken above new highs. So overall, the global stock markets are bullish. We're breaking to new highs. This is the lows seen. This arrow is pointing to the lows seen in 2009, and the market has risen over 100% since then. But what is quite sad to me is most retail investors are sitting on the sidelines worried about all the bad news. But the stock markets, please don't work like that. This is the best opportunity to make money from the stock markets if you know how to protect from the downside and where to invest. This is the Asia ex-Japan index. I mentioned in September here that we had a breakout to the upside. We tested back. Then there was consolidation at this level. You can see all across here there's been consolidation, and it's broken out to the upside. We just got support over the 60 level, and it's moving up. So Asia ex-Japan looks to be in a firm uptrend. This is the semiconductor index. Now that's been signaled by me to be in an uptrend, although we have to be a bit cautious because we're inside of this downward movement. That's the upside resistance where that circle is, and this is the downside support. We're in that flag formation, but it looks to me we could break out to the upside. Then let's go across to look at Europe as a whole, and how strong is this? This was the resistance levels here at 30 from August of 2011 all the way through to the beginning of December last year, and the market has risen from 30, or this ProShares Exchange Traded Fund ETF has risen from 30 to 37 in 2 months. That's just over 20% movement. How strong is that? So sometimes you've got to go to those places where there's bad news, and less bad news becomes good news. Here's steel and iron. I told you back in June of last year, and July of last year, and August of last year, it looked like a bottoming out formation was happening. We then broke out of this minor downtrend, and it looks to me if support's coming in just around 510, and if we move up from here, that'll be a good sign if steel and iron is starting to rise. This is Latin America, and I was right on the button with this in December. I advised here that the breakout had happened where this arrow is. We went above, we tested back for support here, and we've risen now from an area of 72 to 77, which is just under 5 points, about 6-7% in less than a month. And it looks to me as if that's going to gain momentum. So overall, on the global markets, we're in a bullish trend. We have identified exceptional buys in the banking and financial sector, exceptional buys in the internet sector, and also in certain selective Asian markets. I will be later this week going through some individual stocks that have exceptional earnings growth in relation to their PE ratio. So this is Graham Bibby here, wishing you an amazing 2013. It is the year of abundance. I haven't seen cycles like this for over 20 years, and I think this is the best time if you want to join me for making money in the market, either follow www.howtotradethestockmarket.com or www.stockmarketnewschannel.com, or if you want me to look at managing some money for you, right now you can email me at ceo@richmondth.com, and I'll look into your personal situation and we'll be very pleased to give you some advice. This is Bibby signing off on the 13th of January 2013.